Hello traders, welcome to the Nexoel Trading Hub YouTube channel. So we're going to be looking at the weekly forecast for the coming week. If you guys have been following us from last year, then you should know we always make updates regarding forecast every week. And the forecast for last week was already posted on Saturday, and those who were able to watch that, utilize that to execute their trade last week. You can also check out the review. The reviews are already made available in the YouTube channel, like for the EURUSD, AUDUSD. So guys, let's head to the chart to look at what we are anticipating to see for the coming week. So this is a dollar index, and this is the monthly time frame. You know, last week I projected and showed us the monthly bearish fair value gap, how we saw the December candle closing above the mean threshold of the monthly bearish fair value gap. And then we identify the fair value gap that resides between this candle and this candle last week, anticipating to see further bullish movements to the upside when price returned to mitigate that fair value gap. And in confluence, I told us to anticipate to see the possibility of price returning to the 25% of this candle week, because I pointed out that candle weeks are also sponsorship zones when we drop to the lower time frame. And what we can see clearly is that price returned to the downside, but price did not necessarily mitigate the 25% of this candle week before price went bullish. But we can see that price respected the mean threshold of the bearish monthly fair value gap, and then we had the bullish continuation to the upside. You know, we are looking forward to see the possibility that price may take out this buy side liquidity. This is our draw on liquidity. But I'm not saying that we're going to immediately see the bullish movement that would take out this buy side liquidity. Don't forget, this is the monthly time frame. But we are just having a bigger picture to that, because we saw price fail to take out the sell side, and then we started seeing bullish momentum from October, I think, last year. And now we can see the bullish continuation to the upside. So let's drop to the weekly time frame to begin to redefine our sponsorship zones. So this is the weekly time frame. If you can vividly remember, also last week we identified this breakout block, and we can see in confluence it is within the weekly fair value gap. And here we have our monthly fair value gap we identify from the monthly time frame. So the fair value gap we are seeing here in the weekly time frame is the 25% level of the candle week we identify from the monthly time frame that I was expecting to see the possibility that price would dip lower into, because we considered this as sell side liquidity from the lower time frame, and that should be the 4-hour time frame. But now what we can see is that price did not necessarily dip below to the weekly fair value gap and then give us the bullish continuation. That pullback returned and respected the mean threshold of the bearish monthly fair value gap. And we can see how price gave us the bullish continuation to the upside. And we can see that last week closed above the bearish monthly fair value gap, and also above the consequent encroachment of the breakout block in the weekly time frame. So I'm expecting to see further bullish move in the dollar index, but you know, we should anticipate bearish movement, which is going to be the pullback movement. And then we can begin to frame our entry from the discount price levels so that we can continue bullish to the upside. Because clearly what we can also see is that price is reacting within this weekly fair value gap zone, which is in confluence to the breaker here. But now price have closed above the consequent encroachment of the breaker. So let's check the daily time frame. So here in the daily time frame, what we can clearly see in the daily time frame is we have price reacting at this order block. This is the up close candle that gave us the impulsive movement to the downside that took out this low, and further sponsor more bearish movement that took out this low point. And what we can see is that is where price is currently reacting at. So we can see the possibility of a pullback to the downside before we can have the bullish continuation to the upside. So I'm looking forward to see the possibility of price deep into the daily fair value gap, and then we have the bullish continuation. This is what I'm looking forward to see. Or we could just see the continuation of the bullish movement, and then price may create another structure and continue bullish. But then, since price is reacting at an order block in the daily time frame, which we have clearly seen here, this is that up close candle to the upside that has given us this bearish impulsive to the downside that took out this low, and in extension further sponsor more bearish movement to the downside. So we could see price reaction there to the downside, giving us a pullback to return into the daily fair value gap, and then we frame the bullish continuation. So for a clear picture to this, we can look at the 4-hour time frame. So here in the 4-hour time frame, we can clearly see this is the daily fair value gap we identify from the daily time frame. And above the daily fair value gap, we have this trend line liquidity. So we can see here that this price delivery is facing rejection here. Though we are seeing a bullish movement to the upside, but we can see the rejection to the downside. Now we can see that we have a bearish colored candle here, and price is failing to continue further to the upside. So we may see a reaction that would drop price to the downside to take out this trend line liquidity, mitigate the daily fair value gap, and then we have the bullish continuation to the upside. So, last week, this was what I saw. We saw the reaction of price at the breakout block we identified from the weekly time frame. So wanted to see how price would return and sweep the sell side liquidity into this weekly fair value gap and the bullish movements. But then we can clearly see that price just returned, respected the monthly fair value gap, consequent encroachment, and then we had that bullish movement to the upside. So for the dollar index, this is my expectation, except when the market opens and then there is a delivery to the upside, then we can begin to reconsider this zone. But then if price is going to drop immediately from this zone, then I'm expecting to see price takes out this trend line liquidity. I want to see the reaction of price within this daily fair value gap, and then we continue bullish to the upside in the dollar index. So this is what I have to show us, guys, in the dollar index. Let's check out the Euro USD pair. This is Euro USD, and this is also the monthly time frame. So, last week I told us to anticipate to see the pullback for price to mitigate the 25% of this candle week, and we can clearly see price give us that pullback, and then we have the bearish movement to the downside. So this is the monthly fair value gap. We are still expecting to see more bearish movements in the Euro USD pair if the DXY continues strongly bullish. So let's go to the weekly time frame to begin to frame our expectation for the coming week. Here we are in the weekly time frame. We identified this order block that was violated by this impulsive movement to the upside. And we can see within that is also the monthly fair value gap. And we also have this weekly fair value gap. Now we can see price reacted at the order block that was violated by this impulsive movement to the upside, which is within the monthly fair value gap. And this is the mean threshold of the monthly fair value gap. And then we saw this candle close above the mean threshold and also above the order block that was violated. So now what we can clearly see is last week I told us to expect a bullish movement to the upside, and then we framed the bearish fall to the downside, and we can clearly see how that happened. So if you want to have a clear picture to how we took entry in this movement to the downside, you can do well to check the Euro USD trade review, which is already available in the YouTube channel. So for the Euro USD, I'm still expecting more bearish movements, though we're going to see bullish push of price to the upside, since we are seeing that price is still respecting the mean threshold of the violated order block and also the mean threshold of the monthly fair value gap. So let's drop to the daily time frame to look at our sponsorship zones. So this is the daily time frame, and what we can clearly see in the daily time frame is this. So my expectation in the daily time frame is, since price is respecting the mean threshold of the order block that was violated to the upside with the impulsive movement from the weekly time frame, we can see our price is closing above the mean threshold of that order block. So I'm anticipating to see how price is going to return to the upside, and I'm looking forward to this daily fair value gap. Then we can begin to frame the bearish continuation to the downside. We have this unmitigated order flow. What we can see is that price here mitigated the week. We still have the volume and the open price zone unmitigated. this is the trend line liquidity in the daily time frame. So I'm not expecting really to see price take small movement to the upside before continuing bearish to the downside. But let's all observe the reaction of price when price return into this daily fair value gap. So basically, this is my expectation for the Euro USD. I want to see a movement to this daily fair value gap, and then we frame the bearish continuation to the downside. So this is my expectation for Euro USD, except price decides to give us more bullish movement to the upside to take out this trend line liquidity to properly mitigate this order flow before we have the bearish continuation to the downside. So let's drop to the 4-hour time frame. So here in the 4-hour time frame, what we can clearly see is this is the daily trend line liquidity zone, and what we can clearly see in the 4-hour time frame, we also have this trend line liquidity zone in the 4-hour time frame. And we can see the rejection that price is facing at the mean threshold of the sponsorship zone. This is the reason why I'm expecting the possibility of a push of price to the upside, and then we can begin to see the price reaction within this daily fair value gap to enable us consider if we are going to continue bearish to the downside, because I'm not really anticipating to see that price gives us more bullish move into this zone we identify from the daily time frame. So I'm expecting to see how price will take out this trend line liquidity, then we can consider the bearish continuation, except price decide to dip more higher, possibly into this particular zone, which is a mitigation block zone here. Except price decide to return to this mitigation block, and then we can frame the bearish continuation to the downside. So this is my expectation in the Euro USD. So guys, let's check out the GBPUSD pair. So guys, this is GBPUSD, and this is the monthly time frame. So we can see how our bearish movement took place. We anticipated to see it's going to sweep this sell side liquidity. Price successfully gave us that movement to the downside, swept the sell side liquidity. We identified this institutional order flow, or we say the order block, because this is the last up close candle before we had this bearish movement to the downside. Price mitigated the fair value gap, further give a movement into the order block, and then we have the bearish movements that started off from October last year, and we saw December candle. So we anticipated to see how price was going to sweep the sell side liquidity last week, and you can clearly see that. So we could further see movement of price to the downside, meaning the sell side liquidity is our next draw on liquidity. So here we have a rejection block, so we have to wait to see the reaction of price at the rejection block. But this is the monthly time frame anyway. So let's drop to the weekly time frame. This is the weekly time frame, and what we can clearly see from the weekly time frame is that we have price broke through this order block that sponsored this bullish movement, took out this high point. So we can see how price fell to the downside, took this out. Now we can see the reaction of price at this weekly fair value gap. In Confluence, we have this monthly fair value gap, and we have this bearish continuation to the downside. What we can clearly see is that price is reacting at this order block zone, and we can see that price has closed below the volume of that order block. So we could see bearish continuation to the downside. But before we have that bearish continuation to the downside, we could see the possibility of a movement of price to the upside into the 25% of this candle volume, or the 50% of this candle volume. That is last week bearish candle volume, and then we have the bearish continuation to the downside. So let's check the daily time frame. So here in the daily time frame, what we can clearly see from the daily time frame is that price is reacting at this rejection block. We can see the impulse to the upside. Price took out this high, so we have our rejection block here because this printed the lowest candle, giving us this wick to the downside before the bullish movement to the upside. So now what we can see clearly is price is reacting at that rejection block zone. So for the GBPUSD, we also have this fair value gap above the implied daily fair value gap. So for the GBPUSD, I'm expecting to see how price returns into this implied fair value gap, and then we frame the bearish continuation of price to the downside. or we could see the possibility of price dipping higher into this fair value gap, and then we have the bearish continuation to the downside for the GBP USD. So the Euro USD, GBP USD are all heavily bearish, except we see otherwise price continues bullish. But these pairs are heavily bearish, just the way we can see that DXY is bullish. So let's check the 4-hour time frame so that we can also redefine the sponsorship zones. So here in the 4-hour time frame, what we can clearly see is we have this buy side liquidity in the 4-hour time frame, and here we have this up close candle before this further bearish movement of price to the downside. So just the way we identify from the daily time frame, how I'm expecting to see the possibility of a bullish move, price should react at the implied daily fair value gap. So you can see within the implied daily fair value gap, we identify an order block, the up close candle before the further bearish move, and here we have a buy side liquidity. So we're expecting to see the market may sweep the buy side, and then we have the fall of price to the downside, or price may return further into the daily fair value gap we also saw in the daily time frame, which is above the implied daily fair value gap, and then we have the bearish continuation. So these are the zones we should wait to see the formation of structure in the lower time frame. Then we can consider going bearish in the market, and if we should find the bullish structure, then we should also take the bullish movement to the upside. So that is basically going to be you counter trading. So let's check the 1-hour time frame so that you can be convinced about this buy side liquidity. Because for those in the mentorship program, they would possibly look at these and consider that it's not a valid pullback. But let's actually drop to the 1-hour time frame so that you can clearly see that also. So here in the 1-hour time frame, we can see that fall of price to the downside. We can clearly see this is the lowest candle. Price gave us a pullback, swept the high. We have the fall of price. This is the lowest candle. And you can see how price went, swept the high of the lowest candle. So you can see this is clearly our buy side liquidity. So we could see the return of price into the implied daily fair value gap, and then the bearish continuation to the downside. Here we have this down close candle before this further bullish movement that swept the high of the last down close candle that gave us the low. So we could see price return into that zone, and then price face rejection to continue bearish to the downside. But you want to take that bearish movement by going to the lower time frame to look at structure before you do that, because price may return to the implied fair value gap and decide to further dip into this fair value gap before we have that bearish continuation to the downside. So this is my outlook for the GBP USD pair. So let's check out the AUD USD pair and the other pairs we're going to be looking out for in this week. This is AUD USD. Last week we anticipated to see how price was going to dip into our monthly fair value gap, because our projection is to take out the sell side liquidity resting here. Since what we can see is that volume here within December's candle violated the mean threshold of this rejection block. So we expected to see that movement of price to the downside to take out the sell side after price returned to mitigate the monthly fair value gap. Now we can clearly see the bullish move that returned to mitigate the monthly fair value gap, which within the monthly fair value gap, we identify the weekly and also the daily fair value gap. And now we can see the push of price to the downside. This is our next draw on liquidity in extension, this sell side liquidity, when we're looking at a bigger picture to price movements. But then let's go to the weekly time frame so that we can begin to redefine our sponsorship zone for the coming week. So here in the weekly time frame, we can clearly see that we have this order block here. Price return, reacted at it, did not really mitigate the volume of the down close candle before this impulsive movement, and then price went to the upside. Now we can see clearly how price is dipping into the volume. So before we get to establish price taking out this sell side liquidity we identify from the monthly time frame, we have to wait to see the reaction of price at the mean threshold of the order block we just identified in the weekly time frame. So you can clearly see last week we saw the weekly fair value gap, how price returned into the weekly fair value gap, and we framed the bearish movement to the downside. So for the AUD USD, I'm also still expecting to see further bearish movements to the downside. In extension, our target is the mean threshold of this order block. But definitely we have to wait for a pullback before we have that continuation to the downside. So let's check the daily time frame. So guys, this is the daily time frame, and clearly we can see that price respected our forecast for last week, the daily fair value gap, the weekly fair value gap, and the monthly fair value gap. We can see the return. In the 4-hour time frame, I believe we also saw the order block where price mitigated and gave us this movement. Price took out the buy side liquidity, fell to the downside. So now we can see here we have the daily implied fair value gap. So I'm expecting to see how price is going to return into the daily implied fair value gap, and then we frame the bearish continuation to the downside. Except price decides to go above the daily implied fair value gap into this fair value gap resting here. But my expectation is to see a pullback to the daily implied fair value gap, and then we frame our bearish continuation to the downside in the AUDUSD pair. So let's check the 4-hour time frame to also redefine the sponsorship zone clearly. So here in the 4-hour time frame, what we can see is, this is it. Price reacted at the order block, gave us the movement to the downside. And here we have a break of structure. So I want to see the buy side liquidity that price is going to take out before we have the continuation to the downside. Clearly within the daily implied fair value gap, we have the swing high points. So we may see how price is going to take out that swing high points. And then we see price reaction at this order block, and then we frame a bearish movement to the downside, or price may dip higher to react at this order block, and we frame the bearish continuation to the downside. So we just have to keep an eye to see the price reaction within these zones, and then we can frame our bearish continuation to the downside, targeting the main threshold of the weekly order block, and then we can consider either price is going to continue bearish, or we're going to start seeing reaction at that weekly order block to go bullish. But this is my expectation for the AUDUSD pair. So let's also check out the NZDUSD pair. And lastly, we're going to check out the gold pair too. So guys, this is NZDUSD. We anticipated bearish movements. We expected to see price mitigate the monthly fair value gap we identified last week. So this is our draw on liquidity, the sell side liquidity. So let's check the weekly time frame and begin to frame our expectation. So this is the weekly time frame. So we can also see how price clearly respected the weekly fair value gap within the monthly fair value gap. So price is being drawn to the sell side liquidity we identified from the monthly time frame, which we can also clearly see here in the weekly time frame. So we want to see price possibly gives us the bullish pullback, and then we have the bearish continuation to the downside. But we can clearly identify those zones here in the weekly time frame. So let's go to the daily time frame so that we can identify our sponsorship zones that we could expect the reaction of price at. So here is the daily time frame, and what we can clearly see in the daily time frame is this. We have the bearish fall of price. Now price gave us this buy side liquidity. We have this return that took out the buy side liquidity, further mitigated the weekly fair value gap in confluence to the daily fair value gap and also the monthly fair value gap. And then we can see this bearish fall of price to the downside. So in the NZDUSD, what we can see, we have this daily implied fair value gap, and above the daily implied fair value gap, we have this fair value gap. And we can see that this candle took out this liquidity. So I'm expecting to see how price is going to react at the daily implied fair value gap, and then we frame our bearish continuation to the downside, or we could see price further push into this fair value gap before we have the bearish continuation to the downside in the NZDUSD pair. So let's check the 4-hour time frame. This is the 4-hour time frame, and what we can clearly see also in the 4-hour time frame is how price reacted at the weekly fair value gap, which is also within the daily fair value gap. And we can see in the 4-hour we also have a fair value gap there also. Now we can see price took out this buy side liquidity. We now have the bearish continuation to the downside. So we can see we have a break of structure here. So if price is pulling to the upside, where's our next drawn liquidity? Then we are clearly going to see and expect to see that price would clear this high points. So upon price clearing this high points, we can begin to look out for the structure that price will be creating in lower time frame, or we may see further push into the zone since we have this up close candle that sponsored this impulsive movement to the downside. So price may consider this as trend line liquidity and take out all this liquidity, and then we have the bearish continuation to the downside. So this is my expectation for the NZDUSD pair. So let's check out the USDJPY pair also before we head to the gold pair. This is USDJPY pair, and what we can clearly see is that price took out the sell side liquidity. We have liquidity sweep, and then we have this movement to the upside. Price closed above this monthly fair value gap. So the monthly fair value gap is going to react as an inversion fair value gap, and this is the next drawn liquidity. This is the buy side liquidity. But what we can see is that price is reacting at this order block. We have this impulse that closed above the monthly fair value gap. Now it is an inversion fair value gap. So we would want to see how price is going to respect the mean threshold of this bearish order block to consider how deep price is going to dip lower to the downside before we have the possibility of a bullish continuation in the USDJPY. So this is the next draw on liquidity basically from the monthly time frame in the USDJPY pair. So let's drop to the weekly time frame to look at our sponsorship zone to consider for the coming week. So here in the USDJPY weekly time frame, so this is our liquidity sweep which we identify from the monthly time frame. Basically now this is our sell side liquidity, this is our buy side liquidity. Now we can see that price is being drawn to the buy side liquidity. Now here what we have is price give us this fair value gap. We can see our price broke above this fair value gap, return to retest it as an inversion fair value gap here in the weekly time frame, and we can see this bullish movement. Here we have this fair value gap here where price was facing rejection that gave this bearish movement, and now we have this movement that closed above this fair value gap. So this fair value gap in extension is acting as an inversion fair value gap, and we can clearly see we have this weekly fair value gap here. Now we can see that price is mitigating this fair value gap, took out this buy side liquidity to the upside, or we can clearly try to identify if that is a relatively equal high or the market actually took out the buy side liquidity. So let's clearly identify that first. So let's identify that clearly. So we can see our line is resting on the high of that candle. So let's clearly identify that. So we actually have a sweep of that buy side liquidity. So meaning the institutions have taken out the buy side liquidity resting here. Price is still reacting at this fair value gap. And we can see that volume closed below all this other previous candle. So we could see the dip of price to the downside before we can consider the bullish movements to the upside. So we can consider this as our sell side liquidity that the market may aim to clear to mitigate this inversion fair value gap in confluence to this weekly fair value gap, and we have the bullish continuation. But then let's drop to the daily time frame to have a clearer picture to that. Here in the daily time frame, what we can clearly see is that we can see that sweep of the high points. Price took out the buy side liquidity. So clearly we can see here we have the sell side liquidity in the daily time frame. So in confluence, we have the inversion fair value gap we identify from the weekly time frame within this weekly fair value gap. So I'm expecting to see in the USDJPY further bearish continuation to this zone, and then we can look forward to frame a bullish continuation to the upside. So this is my expectation in USDJPY. Let's check the 4-hour time frame. So here in the 4-hour time frame, we can clearly see that in confluence to the inversion fair value gap identified in the weekly time frame, and also this fair value gap we identify in the weekly time frame, we can see we have this down close candle that gave us the impulsive movement to the upside. So we could see price return to the downside to take out this sell side liquidity, mitigate this zone, which is in confluence also to the inversion fair value gap, and then we frame the bullish continuation to the upside. So this is my expectation for USDJPY. So let's check the gold pair, and that brings us to the end of the weekly forecast for the coming week. So guys, this is gold pair. So, last week we identified this monthly fair value gap, how price respected the fair value gap, closing above the fair value gap, and also the mean threshold of the fair value gap in the monthly time frame. Though I expected us to see more fall of price to take out this sell side liquidity before any form of a bullish movement, price did not really dip that low before going bullish to the upside. I clearly stated that gold wasn't really clear for me last week. So let's check the weekly time frame. So here's the weekly time frame. So we can see price action here, price reaction to this monthly fair value gap. We can see how price is still trading above that monthly fair value gap. So we could see the possibility of price taking out this high. So meaning that is the draw on liquidity. So we could see price for the push to the upside to take out this high before possibly going bearish in the markets. So let's check out the daily time frame so that we can identify sponsorship zones. So here in the daily time frame, what we clearly have in the daily time frame now is we can clearly see now we have this daily inversion fair value gap, because this is a fair value gap. If we were to continue bearish, price should have respected this, and we have further bearish continuation to the downside. I told you guys last week to wait to see the reaction of price at this order block, because price may possibly give us a bullish move at this order block. Since I was seeing that we have this consolidation, this poor price delivery here, even though we are seeing impulse, but structure is not clearly stated in this price delivery. So I told us to expect the possibility that price may go bullish at this order block, and that was what happened. So now we can see now price is facing reaction at this order block. This order block took out this liquidity. So we could see price now, since we are seeing it reacting at this order block, and price is closed below the volume of this order block. So we could see price further give us a bearish movement to the downside to mitigate this daily inversion fair value gap before we can start considering to see if the market is going to go bullish to sweep this buy side liquidity, or the market is going to go bearish. Gold is just still not very clear to me. So we could see this reaction. Price may return to this daily fair value gap, which is now an inversion fair value gap. And then we could see gold gives us this movement to the upside, respect this order block, and continues bullish to the upside. Or we could just see gold is going to drop to the downside, and then if you're planning to take a sell move, then wait to see the reaction of gold within this inversion fair value gap. Then that would help us determine if now gold is going to further fall to the downside. So meaning we are going to see if price is going to break through this inversion fair value gap, then we're going to know that we're going to continue bearish to the downside. So this is it. We're going to see if gold takes out the inversion fair value gap, then we're going to expect to see a pullback to retest the inversion fair value gap, and then we have continuation to the downside. So these are my two expectations in the gold pair. Let's check the 4-hour time frame if we could possibly redefine this expectation. So here in the 4-hour time frame, we can clearly see that to our daily order block, we have price reacting at the 4-hour fair value gap. This movement took out liquidity. So here is our breakout block. So in confluence, we have the fair value gap. So we could see price dip lower to the downside. So you could possibly take your profit at this inversion fair value gap. But then if you're believing that gold is going to continue falling to the downside, then you can just hold your position to trade gold further to the downside. Since we have all this stack of liquidities resting here, we can see liquidity pools all around here. So since DXY, we're expecting it to be bullish, then we could see gold gets the bearish movement. But you can clearly see that DXY was bullish. Gold also maintained a bullish movement. So this is just, I'm being sincere and clear to you guys about my expectation on gold. So this is what I'm expecting to see in gold, guys. So till we see the delivery of price when the market opens, then we can consider the ideal extended position we're going to hold in gold. Let's also clearly look at the 1 hour time frame if we're going to see anything forming there. So this is also it in the 1 hour time frame. Price is reacting at that 4 hour fair value gap, which is also in confluence to the daily order block, and we have the 4 hour breakout block also. So we could see that fall. We can see we have stack of liquidities here. So gold might go bearish in an extended period, but this is just what I have to show you guys in gold. So until I see price delivery when the market opens, then I will begin to reconsider my expectation if I'm going to expect to see a bullish movement or I'm going to see further bearish movement, which is also, let me say, my ideal expectation then. So guys, this is all I have to show us guys for the coming week. Cheers and God bless you all.